Good afternoon, everyone. How are you? My name is Dee Ryan. I'm the CEO of Limerick Chamber, and on behalf of Limerick Chamber, I'd like to welcome everyone back to the first in our autumn series of webinars in support of our membership. I hope you had a chance to take a little bit of a break over the summer and got in some staycationing. There was no rest for the government, it seems, and in late July, they announced as part of the July stimulus package this new support scheme, income support scheme, which is a replacement for the temporary wage support scheme, and it's called the Employment Wage Subsidy Scheme, and that is the topic of today's webinar. I'd like to take this opportunity to sincerely thank Leanne Storin from EY in Limerick for partnering with us to deliver this information session today, and we are delighted that Aileen Downs is also joining us to share the knowledge and the expertise that they have within EY to help you as employers through this transition to the Employment Wage Subsidy Scheme and take your questions on eligibility. Now, we have a number of people joining us on the call this afternoon, and we're hoping to get as much information to you as possible. I'd like to draw your attention to the Q&A function at the bottom of your screen there. Please feel free to pop in questions into the Q&A function throughout the session, and we are monitoring those questions to find the most common topics and feed them through to the discussion. However, should we not cover your question in the session, please feel free to contact the Chamber after the session, and we will do our best to work with you to answer your queries. So without further ado, I'm going to thank and hand you over to Leanne.
Thanks, Dee. Good afternoon, everyone. Welcome to today's webinar. We're delighted to partner with Limerick Chamber on this highly topical subject matter right now. As Dee mentioned, my name is Leanne Storin and I'm Head of Tax in EY Limerick. I'm joined today by my colleague, Aileen Downs. Aileen is EY's lead on these wage subsidy programmes, the first of which was rolled out in March earlier this year, which I know feels like a long time ago now. So today we intend to talk you through the latest iteration of these programmes, this one being the Employment Wage Subsidy Scheme, or EWSS, and that commenced just over a week ago on the 1st of September. We'll also discuss its predecessor, the Temporary Wage Subsidy Scheme, which I'm sure you're all familiar with. We'll discuss the challenges around this that we've seen to date, as well as the next steps you can expect to see from revenue in relation to that. We'll hopefully give you some clarity on whether you are eligible for the new scheme, as well as some insights on how best to approach revenues queries and propose reconciliations going back to the original temporary wage subsidy scheme. So without further ado, I'm going to bring Aileen into the conversation. So welcome, Aileen, and thanks for joining us.
Pleasure.
So the employment wage subsidy, it's an extension of the temporary wage subsidy, is that correct?
Well, yes and no. Sorry, good morning or good afternoon, everybody, to start with. It's not, Leanne, it's not an extension of the temporary wage subsidy, and a lot of people are getting confused by that. It is being positioned politically and in the media as an extension, but it's actually a very, very different scheme, and you need to be aware of that.
Right, okay. And in what way is it different?
Well, first of all, it's a much easier scheme to administer. This is the payment of a subsidy directly to an employer for the employer to keep, rather than a subsidy paid to an employer to be passed on to the employee, which is what the temporary wage subsidy was. So the upshot is you no longer have a payment going through the employee's payroll, and that brought an awful lot of angst with regards to tax bills building up for employees, or indeed employees not even getting mortgages as a result of being on the wage subsidy.
Yeah, well, that'll be a relief, I guess, to a lot of employers. I know employers were struggling with that idea that their employees might have been building up tax bills. I mean, there was a lot of talk about that in the media. And in fact, we were aware that some employers actually chose to come out of the scheme as a consequence of that. They were just getting too much of a backlash from employees, and they felt it just wasn't worth the hassle.
Absolutely. All that grief has now been removed. Now, a qualifying employee is effectively anyone who's on the payroll in real time. Unless they're a family member or proprietary director, they need to have been on the payroll at any time up to the 30th of June 2020. With the temporary wage subsidy, you could only, by and large, bring in people who were on the payroll in January and February 2020, though they did extend that later on in, I think it was around May, when you were allowed to bring in people who had been on maternity leave. And there are still some income limits on this subsidy, but you don't have to be working out net pay and the gross pay and see what top-ups you can pay, etc. Also, and another key thing, the concept of ability to pay is gone from this scheme. For the temporary wage subsidy, an eligible employer was someone who had more than a 25% downturn in Q2 2020, but was also unable to meet payroll costs. Now, to be fair, revenue weren't overly focused on that point during the course of the TWS, but that doesn't mean to say that when they go to look at it at some later point in the future, that they don't have a look at your ability to pay in that context. But for the employment wage subsidy, the concept of ability to pay doesn't feature at all. An eligible employer is an employer with a 30% downturn on turnover or customer orders in the second half of 2020. That is from the 1st of July 2020 to 31st of December 2020. That's the qualifying period.
Right, okay. So it does sound like a lot of the complications have been removed from this new version of the scheme. Just on that qualifying period you mentioned there, so it's 1 July 2020 to 31 December 2020. Look, we're in September, we're not even halfway through the qualifying period yet. How is that actually going to work in practice?
Okay, can we just take a step back here for a second before I get on to that? As I was saying a moment ago, this scheme is much simpler, both in terms of how to administer as well as looking at eligibility. But let's be very clear here. The lines are very, very clear. Once you stay between them, you're absolutely fine. And to be fair to everyone, they have to do this. If you go outside the lines, it's going to cost you dearly. So if you take this from the top, it doesn't matter whether you qualified for the temporary wage subsidy or not, or whether even if you did qualify, you didn't participate, or even if you did participate, you pulled out of it halfway through. You're now looking at yourself anew and whether you qualify for the new employment wage subsidy. So first of all, you identify your position for the second half of 2019, depending on what you do, excuse me, as to whether you're looking at turnover or customer orders is more appropriate. Now, you measure the same results for July and August 2020, bearing in mind they are now a fact. We've gone by those 2 months. And also what you reasonably expect for the rest of 2020. In looking at that, if you're showing more than a 30% downturn or a predicted downturn, then you qualify.
Okay, that sounds easy. So you must be able to show a reduction in turnover or customer orders. Does it matter what's caused that downturn?
Thanks, Leanne. Absolutely, it does. The downturn must be because of COVID, and you must be able to demonstrate that. I can't emphasize enough the need to document everything. So if you're looking at your position today, the 9th of September, to see whether you qualify for the employment wage subsidy or not, look at your results for July and August, look at your forecast for the rest of the year, and see, do you meet the 30% threshold? If you do, then, and if you haven't already done so, register for the employment wage subsidy scheme. It doesn't matter if you were previously registered for the temporary wage subsidy, you need to register separately for the employment wage subsidy. It does not transfer over automatically.
Okay. So, Aileen, I guess no one has a crystal ball, and if we've learned nothing else this year, it's that not many have an idea what the results are going to be for the second half of 2020, particularly as there's talk of localised lockdowns, and we know Limerick is up in lights at the moment as well, so lots of uncertainty. Unfortunately, for some, it will be obvious from the outset that they will be able to clear that 30% threshold by a mile. But for lots of others who are still up and running, okay, all right, at a slower pace, probably, they can't be definite. And actually, in talking with a lot of our clients, they've actually had better month-on-month results now than they could have ever predicted in March or April just gone by. So kind of in that context, how do revenue expect anyone to be able to predict with any certainty that they're going to meet that 30% threshold, that they actually are going to be down by 30%?
Well, not only have revenue provided guidance on this, but it's actually enshrined in the legislation. An employer must look at their position at the end of every month and see where they're at. If they're still on track to be greater than 30% down, then they continue to claim for the following month. If they're not, they must deregister from the scheme from the first of the following month. So how this is going to work in practice is like this, okay? So let's say July to December 2019, your turnover was 100. You take your turnover for July and August 2020, which is now factual, and add it to your best estimates for the rest of the year. If these total 70 or less, you clearly qualify for the employment wage subsidy and claim for September payroll. So far, so easy. On the 30th of September, you conduct an analysis of where you're at, and I will emphasize again, you document that analysis. You now reconsider your prediction for the next 3 months. Are they still correct, or do they need to be revised upwards as September was better than you expected? And in fact, even if you feel at this moment in time, on the 9th of September, you might be okay and you won't hit the 30%, I'd advise you, conduct your analysis at the end of every month, document it. Nobody knows, as you say, none of us have a crystal ball. And if you think things are going up or down, if you feel you're going to be in the frame at any point on the 30%, you go into the scheme. So If your actual results to date, which are now for July, August and September, this is on the 30th of September, you're conducting this analysis, plus your predicted results for the rest of the year add up to more than 70, then you must deregister from the scheme from the 1st of October. But if there's still going to be less than 70, you carry on and you claim for October. And you do the same thing on the 31st of October to determine whether or not you're eligible to claim for November. You add up your actual results to that point, plus your prediction to the end of the year. If you are hitting the 30%, you stay in. If you're not hitting the 30%, you deregister. It doesn't stop you coming in at a later stage if things kind of take a downturn for you again. Now, also bear in mind that based on the current legislation, if you have 30% or more of a downturn in the 6 months to 31st of December, you're claiming the employment wage subsidy right up until the 31st of March 2021.
Right, okay. Okay, that makes sense. So how much is the subsidy worth? How much will an employer get for each employee?
The maths are very simple, Leanne. If the employee's gross weekly wage is less than €151.50, you actually get nothing. But if they're between €151.50 and €203, you get €151.50 per week per employee for those employees on earnings between €151 and €203. And if they're over €203, you get €203 per week per employee. But if you don't get anything for anybody being paid more than $1,462 per week, and that's somebody on a salary around 76,000, and that was kind of a cut-off as well on the temporary wage subsidy. Like the bottom line is, if you have 50 employees in the average industrial wage, you'll collect over 300,000. It's exactly 30 weeks and 1 day from the 1st of September 2020 to the 31st of March 2021.
Okay, very good. Well, I'm sure, you know, that's a big number. I'm sure that'll certainly make a big difference, if not a make or break difference to many employers. And just those amounts you've just mentioned, do they include the PRSI saving?
No, you get that as well. Revenue will reduce your payroll tax bill on that.
Okay, that's good. So what would you say is the most important thing an employer needs to do right now?
Have a look at where they're at. And as I say, even if they don't think they're going to hit the 30%, have a look, conduct an analysis at the end of every month. But having a look at where you're at the minute, if you believe a 30% downturn for July to December is likely, register for the scheme. The registration is very straightforward and can be done on Ross, okay? The one thing you will need though is tax clearance. Most employers have that anyway, but if you don't, apply for it. And what's important is actually when you're applying for it, put in EWSS, which is the employment wage subsidy, as the reason you're applying for the tax clearance. Like Revenue, to be fair, are doing what they can to facilitate any employer potentially eligible for the scheme to be able to claim it, but you will need tax clearance. Otherwise, unfortunately, computer will say no.
Okay, so obtaining tax clearance really is critical here, and I know that wasn't the case for the previous temporary wage subsidy scheme.
Yeah, that's right.
And on that point, I think it's probably just worth noting people might be aware that they were able to warehouse some of their PAYE and VAT liabilities that arose since the onset of COVID. So where employers might have done that, those liabilities have been essentially parked. And once you have that agreement to have those liabilities warehoused, that's not going to prevent you getting tax clearance now. However, important just to call out that if you have historic pre-COVID liabilities lurking somewhere in the background, then those liabilities would actually prevent you getting tax clearance in this case. Now, however, you can also agree a phased payment arrangement with the Collector General's office in relation to those liabilities. And if you do that by the 30th of September, then you can still get your tax clearance and the payment of those historic liabilities can then be made on a reduced interest basis. But you do have to address that. I just thought it was important to call that out at this stage because, as we know, obtaining tax clearance really is critical in order to avail of this new scheme.
And actually, on that particular point, Leanne, if you do have historical liabilities where you feel you wouldn't get tax clearance and that's preventing you from claiming the employment wage subsidy, that you're missing out. And it's a bit of a loss, and it might be worth looking at whether or not the wage subsidy finances you clearing those historic liabilities.
Absolutely.
To definitely go towards it.
Absolutely, yeah. Okay, so how do employers actually claim the subsidy? I know with the temporary wage subsidy, the earlier scheme, you had to put in a special PRSI category, J9, I think it was, and then you couldn't pay more than the net pay that the employee got at the end of the year. Is that still the case? Is that how this new scheme works?
No, you're now back onto normal payroll. The net pay issue is gone, which I think every employer in the country that was claiming that temporary wage subsidy will be relieved to hear.
Yeah.
You now process the employee's pay and the PAYE, PRSI and USC as normal. The only thing you need to put into payroll is under other payments, enter employment wage subsidy, it's either going to be €0 or €1 depending on your payroll software, and presumably your payroll software provider will be able to tell you what is required there. And that particular payment, if it happens to be €1, doesn't feature on the employee's payslip at all.
Okay. Is there not a special rate in PRSI?
There's a special rate, but there's no longer a special category, okay? So anybody who claimed the temporary wage subsidy, you may recall that you had class J9 had to be entered for each eligible employee. And this denoted that you were making a wage subsidy claim for that employee, and also that you were paying employer PRSI at the reduced rate of 0.5%. Now, for the employment wage subsidy, an employer processed PRSI as normal. So if the employee is, say, on a class A1 PRSI, then you process payroll using class A1, i.e. with 4% employee PRSI and 11.05% employer PRSI. However, when you submit the payroll report to revenue, they will credit back the employer PRSI onto your account. So you'll ultimately only be charged the 0.5% PRSI for that employee.
Okay, that does sound like a more straightforward approach. I know a lot of employers will be heaving a sigh of relief around that whole net pay thing. When can employers expect to see the subsidy in their account?
Okay, unlike the temporary wage subsidy, which was giving you money and putting money into you, the employer's hands to pass on to the employee, that system allowed for the money to go into your hand before you had to meet payroll. This is different. This is a subsidy to you, the employer, and you're running payroll as normal. So what's happening from now, since the 1st September, at the end of every month, revenue will process the payroll that you have submitted, and they'll post a statement into the Ross inbox of all employers who are claiming the employee wage subsidy by the 5th of the following month. And it'll set out how much the subsidy is due based on the submissions you have made. Now, keep an eye on your Ross inbox and my inquiries, because if revenue have any challenge towards your submissions, they will feature them there. All other things being equal, the system will process the refund after the return due date, which is after the 14th of every month. And revenue have said that best efforts will be made to make that payment as soon as possible after the 14th month. As I say, keep an eye on the inbox, keep an eye on my inquiries. Revenue, to be fair to them, are there to help. If they believe that you qualify for this, they want to put that money into your hands. So they will advise you on how to fix it. The one thing I will say though is if your tax clearance isn't in place, they will not process that refund. But they will, however, flag it to you that that's the reason you're not getting it, and they'll give you an opportunity to rectify it, get your tax clearance in place, and then they will subsequently issue the refund to you.
Okay, very good. So again, tax clearance is really important in this area.
Mm-hmm.
I might just pause there and see if we have any questions coming in before we go any further.
Sure.
Okay, just you said earlier, Aileen, that it's important to stay between the lines. Can you elaborate on that?
Yeah, it's important to stay between the lines, and as I say, this is a very, very straightforward and clear subsidy. Okay, but it's very important. It's straightforward and very clear, and it's also very transparent to revenue. The legislation with regards to the subsidy provides that this subsidy is treated like a tax. It's like income tax. So to the extent that you fall foul with regards to the wage subsidy, you fall foul of the tax legislation. So with that comes interest, penalties, publication as a tax defaulter, etc. Like when we're talking about the turnover or the customer orders being up or down 30%, I really would suggest to people, like, have a look at yourself. If you believe you can stand over that, by all means claim the subsidy. It is very lucrative. If you can't, then you will be bringing the wrath of revenue on you should you try and claim it when you're not ultimately due it. They're very, I mean, when I talk about transparency, if you're filing VAT returns for the latter part of 2020, it's very easy for revenue to clash them against your VAT returns for the second half of 2019. So if you're arguing you're 30% down on 2019, but your VAT returns say something differently, they will be on to you, and they'll be on to you promptly.
Okay. Just some more, I'll just go through a few questions here. What if you don't have July to December 19 to measure against?
Okay, well, it depends on why you don't have July to December 19 to measure against. If you're new in business, you only started up the business, we'll say in the latter part of 2019. If you started it before November 2019, then you take when you started it, let's say the 1st of October to 31 December, and that's your measuring point. If you started it after the 1st of November, then you're actually looking at your prediction for July to December 2020 only. If the business was already there, but in a different version, so in other words, you were a sole trader and now you've incorporated it into a company, you would still compare it to the performance of the business July to December 2019. So it's the business rather than the legal entity under which it traded.
Okay, okay. Another question here. So this person has a number of business divisions, and some of those divisions are doing better than expected and won't be anywhere near the 30% drop. But there are other two divisions who are still doing very badly and can't see improving that anytime soon. Can they look at themselves as a whole? If they look at themselves as a whole, they won't be down 30%. Does that mean they're out of the scheme?
Not necessarily. Excuse me. It very much depends on how you're structured. So with the temporary wage subsidy, revenue came out with sort of some latitude in that, and they have expanded on that one for the employment wage subsidy. The one thing that is clear is you do not get to change your structure now. Okay. If you were already structured before pandemic, when the world was still round, and you were structured in separate business divisions with separate management accounts and separate management, then you can look at those business divisions in isolation. So for that particular questioner, the business divisions are doing well, that's fine. You don't claim the employment wage subsidy. The business divisions that are doing poorly, you can look at them in isolation. But I emphasize only if you're already structured in a manner whereby, even though you may only have the one PAYE registration number, for example, but you do internally look at them as 5 or 6 or however many they are, separate and distinct business divisions. Then and only then can you look at the wage subsidy on a separate basis. But what I will say on that one, actually, sorry, Leanne, is that while you might have good performance, bad performance in some of the business divisions, and if you do have the one PAYE registration number, that whilst in that particular questionnaire, he was saying that the good performance dilutes the bad performance, so they wouldn't hit the 30%. But in other situations, you might have a situation where you will have the bad performance will dilute the good, so that you could have an overall 30%, even though some could be high and some low. So you in that instance, you could look at the entire organization.
All right, okay. Can I pay my employee overtime?
You can, again, we're away from the temporary wage subsidy, where you were very confined as to what you could pay, because the temporary wage subsidy was a subsidy that you were given to pass on to your employee through payroll, even though it wasn't subject to PAYE, and then you could only provide a top-up payment, but you were very constrained to what went through payroll in January and February 2020. Now it's normal payroll. So you process your normal payroll, you pay them their hourly rate, you pay them their overtime, you pay them their shift allowance, etc. And then you look at what subsidy you're entitled to. The only thing is, if you are, and I saw a question come in there as well with regard to bonuses, if you go over the 1462 per week, you're out of the wage subsidy that particular week for that particular employee.
Okay. And what if the employee is part-time?
That's fine. If your employee is part-time, this is solely dependent on what you're processing through payroll. So if you're processing between 151.50 and 203, whether that person works for you 1 day a week or 5 days a week, you'll get 151.50. If you're processing more than 203, and that's gross pay inclusive of benefits in kind, then you'll get the 203. The only thing on that, I would say, and it goes back to the staying between the lines, there's a lot of anti-avoidance legislation there, and revenues guidance is also quite clear in this one. They will not tolerate contriving situations. So if you happen to be, it's your business, your owner-occupier, and they're allowing proprietary directors to be eligible for the wage subsidy, but you cannot start dividing up salaries, payments, emoluments, payroll, call it what you like, between different payrolls, so you get the subsidy on each payroll for the same individual. On that point as well, sorry, I meant to mention earlier when you were asking about staying between the lines, they will not tolerate you taking somebody who was on 80 grand a year and therefore you don't qualify for the subsidy of that person, and replacing them with 2 people on 40 grand, for example, and now you're getting 406 euros a week subsidy for those 2 employees. Anything that looks like you are changing your status quo to manipulate the information and the figures to qualify for the subsidy, the systems that Revenue have now, they can see very, very quickly and very, very easily, and they will call you out on it. And the one thing to be very, very clear on this one It's not a case of you cannot claim for that employee, don't do that again. If you are seen to be falling foul and going outside the lines, you now disqualify from the employment wage subsidy for all your employees for the duration, for the lifetime, up to the 31st of March. So
Okay.
penalties are severe if you try and manipulate the situation.
Okay. I think that, I think everyone can appreciate that's kind of a fair position to take in the current.
Absolutely, yeah.
I'm just looking, there's kind of a theme going through some of the questions that I might address with, maybe could I just ask you, maybe if you give a brief overview on closing out of that temporary wage subsidy scheme.
Sure.
I'll go back to some of the more specific questions then after that.
Okay. Most people will have, some people will already have gotten letters from Revenue, and if you haven't, you will. Because when they announced the temporary wage subsidy initially, they said they would just do a spot check, a risk analysis. They changed their mind on that one. And they're now writing to all 55,000 plus employers who claimed the temporary wage subsidy. The letters are straightforward. This is kind of their first step on risk analysis. They're asking you for an overview of why you consider yourself to be eligible for the scheme, and whatever documentation you have to support that would be useful. And they'll also ask you for copies of the sample pay slips to show you actually paid over the wage subsidy to the employees. Because bear in mind what I said earlier, this wasn't a payment to you, you were merely the payroll operator for this subsidy that was to be passed to the employees. Don't ignore these letters, all right? They're the first step in Revenue's overall risk analysis. And bottom line is you ignore them, then you go up the list on risk. And next, over the months of September and October, Revenue are going to be conducting reconciliations of the subsidy paid out to the employers versus the subsidy that's actually due. Okay, so anybody who claimed the temporary wage subsidy, you might recall you actually got €410 per week for every eligible employee up to the 4th of May, irrespective of how much was actually due. And for the majority of these employees, you would only have been due €350 or even less. So you'll have gotten overpaid. So Revenue are going to issue CSV files with these reconciliations. They're proposing to do that anytime from sort of mid-September onwards. They will then ask you to reconcile that file with your own file showing what subsidy you actually paid out to the employee. Again, just bear in, sorry, just on that, Leanne, just to bear in mind, you'll have paid out a subsidy to the employee that may not match what you're entitled to claim as a subsidy from Revenue. It might have been too little, it might have been too much, and plus you also had that slight overpayment. So there will be a reconciliation to be done there.
Okay, so a bit of diligence, a bit of reconciliation, as you say, is kind of required here to make sure, all is above board on the employer side. Can you see any problems arising with this?
I think the figures from the 4th of May onwards should be relatively straightforward for most employers. Now, I do know some employers struggled with the tapering, and in fact, they applied tapering and then Revenue applied tapering when they uploaded payroll. But Revenue had issued a CSV file at that point, and they were showing what the subsidy could be paid, what tapering was to apply, and the maximum top-up that could be paid. So from 4th of May onwards, it should be more transparent to employers as to what they were entitled to versus what they paid out. But employers were definitely confused what they could pay by way of top-up, and they may have paid employees too much. And to be fair to Revenue, they were trying to react as quickly as possible to the various challenges that did come up. And the result was very regular changes to the guidance, and that was difficult to keep up with. I've struggled with that myself at times. But the bottom line is, wait till see what Revenue sent to you. Compare that to what you actually paid out to the employees for the period in question. Give us a shout or talk to your own advisor if there are any nasty surprises, and then engage with Revenue, depending on whether you believe they got it right or not.
Okay, so just to reiterate, once you receive that letter from Revenue, it sounds like it's best to act straight away to identify any issues, and of course, obviously, the earlier the better to engage with Revenue if necessary.
Absolutely. Like ordinarily, we would, as EY and any advisor in the country, would suggest that it's a good thing that we would run interference on behalf of our clients, and it invariably is. This is a different animal, actually, because Revenue have gone to pains to say employers should not be engaging with advisors. That's not mean to say you should not be talking with your advisors. Please do. I think you would benefit from having the conversations with your advisors, but any interaction with Revenue is conducted directly between yourselves and Revenue through my inquiries or through Ross.
Right, okay. So in terms of like, how do you see the revenue audit activity we can expect on this? How do you see that playing out?
Well, at the moment, like normal service is not there from revenue. Revenue are being extremely fair, extremely generous, and extremely benign. And they are very much, and they're at pains to say it, if you qualify based on the rules that are set out, they want to put that money into your hands. But that's the here and now. And when we actually get back to, hopefully, the normal that we all knew and love, unfortunately, we'll get back the normal revenue that, knowing and loving them might not necessarily have been in the frame. Going back to what I was saying earlier, this money that you are getting, it's to be treated as revenue have said themselves, like a reverse taxation, but it is a tax money. And the legislation governing taxation governs this payment. So when you have a revenue auditor out looking at you in 2 or 3 years' time, hopefully this pandemic and the environment in which we currently operate in will be a thing of the dim and distant past. All the more reason you document everything now. You must keep those records. You need to keep all records with regards to payroll for 6 years. So you will be able to show revenue if an auditor is looking at you in 3 years' time and saying, did you have an inability to pay when we had the temporary wage subsidy? And you can document your thought process as to why you believe you were justified in claiming the temporary wage subsidy at the time. And then when it comes to looking at the employment wage subsidy, particularly where ultimately you did not reach the 30% downturn in July to December 2020, to be able to document your analysis on the last day of each month and be able to show it, and to show that actually things only came good in November or December. Therefore, you were legitimately entitled to claim it for September and October and November or whatever it happened to be. But just because revenue are very much interacting and cutting checks left, right and centre here, that's not going to be sustainable. It's not going to last. And when the revenue auditors are back out on the road, they will be interacting with you in the way that we are all very, very familiar.
Okay, thanks, Aileen. Just a couple more questions before we wrap up. I think you saw that one about the bonus or the quarterly 6 month. Can they spread that over 3 to 6 months, pay them monthly so they don't breach the 1462? We've addressed that one. Would any new hires from now to December qualify for the scheme?
Absolutely. Anybody on payroll in real time, you can qualify for the scheme, which is, as I say, different to the temporary wage subsidy. The only people that would be precluded from that are proprietary directors or family members. They would have had to have been on your payroll at some point, at any point, up to the 30th of June, between 1 July 2019 and 30th of June 2020, to entitle you to claim the employment wage subsidy.
Okay, and there's one, sorry, go ahead.
Yeah, sorry, just on that one as well, Leanne. If you have, even if you were claiming the temporary wage subsidy or you weren't claiming the temporary wage subsidy, and you had if you were claiming the temporary wage subsidy, but you had employees that you weren't eligible to claim for because they only came on your payroll after January, February 2020, for example. Yeah. Revenue are doing what's known as a sweepback. So you can register again, put in a notification on My Inquiries and say that you are claiming the employment wage subsidy for those employees for July and August. And they will allow you to claim it because they didn't qualify for the temporary wage subsidy. So while by and large, this is kicking off from the 1st of September only, there is this sweepback facility for July and August for employees that did not qualify for the temporary wage subsidy because they weren't on your payroll in January, February 2020, but otherwise would be eligible employees.
Okay, very good. Can the difference between gross pay and the ARNWW be
average revenue net weekly pay, ARNWP,
right, yeah. I'm familiar with that, can be given to employees. So can the difference between gross pay and that be given to employees now that the EWSS is finished?
Yes and no. You just need to be kind of careful here because you were claiming the temporary wage subsidy in the first instance on the basis that you struggled to meet ordinary payroll. If you have an arrangement with employees, then there's nothing to stop you doing it, but bearing in mind you now may deem that you might render yourself ineligible for the employment wage subsidy. And you just need to be mindful that you're not seen to have been having deferred income, kicked it down the road until such point as you had exhausted all wage subsidy claims and now everybody gets a pay rise as a consequence. But if there are kind of arrears of pay, or you weren't fully in a position to pay the likes of shift allowance or overtime that employees would ordinarily be entitled to, particularly if they're contractually entitled to, there's nothing to stop you, but just say bear in mind the impact that could have on your employment wage subsidy claims.
Okay, so again, about staying between the lines and being careful not to
Absolutely, yeah.
The scenario. Okay, just one final one, and we might have addressed it actually already, just to be sure. If you employ a new employee part-time, say for 300 per week, can you claim 203?
You can. Yeah, if they're earning, if you're putting more than 203 through payroll, you can claim 203 employment wage subsidy.
Okay, very good. That's all the questions I have in the chat, unless anyone wants to pop any more in. I think that's probably it. Okay, that does appear to be all the questions. So look, we're coming to the end of the session. Just to say thanks to everyone on the call for attending and for all the great questions that came through. Thanks so much to Aileen in particular. That's really informative and insightful, and it's really great to get those practical tips and insights and be able to answer those questions live. Thanks to Dee and Quiva at the Chamber for partnering with us on this and making sure everything runs smoothly, of course. So we at EY do, of course, issue regular updates on the wage subsidies as they are progressing, as they have been progressing. And I'll make sure that all participants today, whether or not you're on our own mailing list, that we get you included going forward. I know Quiva is going to be sharing a recording of this webinar, so we'll include both myself and Aileen's contact details on there. So if you do have any other specific questions at that stage, please do reach out to us directly. So that's it. Thanks everyone, and have a great afternoon.
Thanks. Bye.
Thanks.